All right, Bulls and Bears, what is happening? Back with another dose. Today, we got a lot, as usual, as always, a lot of economic financial news to get caught up on and more. We're going to go outside of the financial spectrum a little bit and talk about some other things that are still related to the economy and finance. But we're going to start off with the usual. We're going to get into real estate. We're going to get into de-dollarization, the cost of living, inflation, all that and a lot more. And let's go ahead and get started. Please make sure you are subscribed. Let's go ahead and start right here. Another rate cut. Another rate cut's coming. In my opinion, November, the meeting is going to be, it will be announced, in my opinion, 100% chance that there will be another rate cut. Now, the central bankers, they're not going to do any speeches for what they call a blackout period before the actual announcement. So, it's a done deal, in my opinion. I mean, let me know what you think down in the comments. If consumers were not so loaded up on debt, you could say, okay, maybe they won't cut the rates. But in my opinion, they have to cut rates, folks. That's how bad it is amongst the consumers. And we're going to talk about how bad it is and some more signs that consumers are getting more and more desperate and closer and tapped out, but closer to being tapped out. Now, when it comes to the talk of rate cuts, just use a basic common sense analysis of this. If the consumer were strong and resilient, like we're being told, why do we need to cut rates? If the economy was strong, why do we need to cut rates, folks? So what they're saying and what they're doing are two completely opposite things. In fact, if you look at some countries, there are countries out there that are actually raising rates now because inflation is too much. Of course, here in the US, people believe the phony number that inflation is between 2 and 3%, when really we know it's much, much higher than that. We give you examples every episode of how inflation is much higher than that. It's rarely that you see any sort of inflation lower than 2% or any deflation, right? With the couple exceptions right now. Certain housing markets are seeing deflation, but 90+% of the housing markets are still up over the year prior. Year over year, still higher. Automobiles, prices are down significantly from the peak and from last year nationwide, right? So those are the couple spots where you can look and say, yes, there's deflation. Look at your utility bills, look at your insurance, right? Look at anything, look at your food prices. Gas prices are down a little bit from the peak, but still way higher than they were. So just because something is down from the peak, that's another thing. Just because something is down from the peak doesn't mean that it's good. It just means that some of the bubble mania has worn off in this area. But overall, I mean, all of us, I think, can agree, prices are still way too high and people have to rely on debt. Why do you think they're out there saying the banks can keep loaning out money and they're not implementing any drastic new measures for banks having to hold currency? In fact, if you look around the world, it's more going digital and less restrictions on money lending. Look at this right here out of Reuters. Bank of England to press on with digital currency in case banks fall short. So folks, not just the US, this is globally. This is what's happening. So they don't have enough actual cash, coins and paper at the bank. So now they're going all digital, what you call a digital currency. Well, if you look at digital currency, many would say that we've already been in a digital currency because most spending right now is done via swipe of a credit card, and a very small portion of the population actually buys things in cash, right? If you go to a swap meet or a flea market or a yard sale, that's mostly cash, of course. But more and more, I went to a swap meet here in San Diego a few months ago. More and more of these people have credit card swiping devices. Even someone that was just looks like they cleaned out their garage and they're selling junk, like mostly junk, mostly old tools and stuff, and they were accepting credit cards. I'm like, wow, this guy's selling junk out of his garage. Maybe it wasn't out of his garage, but he looked like he was selling junk. And he was taking credit card payments. So mostly, folks, it's digital already. Remember, less than 10% of the cash in existence, quote unquote cash, is in physical form. It's mostly digital. Why do you think inflation has not come down? Why do you think the cost of living has not come down? Because when you have the ability to just create currency on a digital screen, then banks can continue to loan out money. Even if people pull their physical money out of the bank, banks can still continue to loan out money. So then you ask the question, well, why are they worried about bank runs? that they can just continue to loan out money because people still go in and try to get cash. People still buy cars in cash, and they use cash for different transactions, like buying a used car from a private party. That's a big cash transaction type of thing. But you're finding more and more that a lot of the people that go into the banks to get out $10,000, $15,000, $20,000 in cash, the bank either says, sorry, we don't have it, or come back Tuesday or whatever to allow us time to get the money because they have so little cash reserves in these banks, most of them. So again, when it comes to this talk of a digital currency, central bank digital currency, in my opinion, we've already been there for over a decade, closer to 2 decades. But it's going to continue to get worse. And pretty soon, they want to completely eliminate cash. They don't want you buying and selling anything outside of what can be tracked and traced through a payment system. So it's going to get worse, folks. October only a few days away. We're still waiting for the October surprise. We had the BRICS meeting here. It wasn't a nothing burger. It was a lot of expectations of what would come out of that meeting. Some said that they would announce a massive dumping of the dollars. But what I said here, I said they're likely not going to forecast exactly when they're going to do it, and they wouldn't do it during the meeting. That wouldn't make sense. But it's still possible that we're going to see this big dollar dump and what's going to be called the night of the shift, where dollars are dumped simultaneously. Now, I think there's going to be something huge that's going to trigger a panic in the markets and global economies. I'm going to talk about that here in just a little bit. And I've been alluding to it a little bit, but I'm going to try to dive into it a little bit more deeply here in this report. But first, we have an announcement here. Consumers worried about the debt payments, missing their debt payments, the highest since 2020. Right? So we're going back to a pandemic era confidence or level of confidence. Consumers worried about missed debt payments, the highest since 2020. Folks, this is why they're looking to cut rates. But cutting rates is going to be too little, too late at this point with the amount of debt that people have. That's why they're doing debt forgiveness in certain areas. Look at all the student loans they're forgiving. Right? Bankruptcies are ticking up, folks. People need to not just have lower payments on the debt, they need to have their debts erased. Otherwise, it's going to be game over very, very soon. And it's becoming more and more widely reported. Here's another recent article here. Even USA Today is talking about this here. Inflation shocked. Low and middle class Americans may not spend normally for years. Why? Because they're loaded up on debt, folks. That's the truth. And they're looking for new ways to continually kick the can down the road. Of course, we saw 2020, all the forgiveness programs, all the shenanigans that they rolled out. They're covering depositors now that even lost more than $250,000. The FDIC is coming in, just borrowing the money or creating the money and reimbursing these depositors to prevent panic and to prevent loss of confidence in the banking sector. But speaking of loss of confidence, we talk a lot here about how countries have fiat currencies. They're not backed. Their dollars or currencies are not backed by anything. Look what happened in Zimbabwe. Zimbabwe's gold-backed currency lost half of its value. So even the gold-backed currency, folks, and I'm not even making this up here. Let me just bring you up a screenshot real quick here. 6 months in, the gold-backed ZiG, touted as a solution to the currency crisis, is struggling to win confidence, folks. So it's not just about backing your currency with something tangible or something, in this case, gold. It's confidence, folks. If the people don't believe in the government that's actually supposedly implementing this, if they don't have confidence, then the currency behind whatever system it is, it's not going to be trusted. And there we have it. So it's lost half of its value, even being partially gold-backed. Less than 6 months after Zimbabwe launched yet another new currency, and there's been a series of new currencies, we've talked about them here on this channel, it was forced to devalue, signaling new challenges for the Southern African country's efforts to stand up to a local currency and reduce dependency on the United States dollar. So de-dollarization is not as easy as it seems because it's been so many years of dollar dominance, right? So the people don't trust the currency, even they're saying that it's backed by gold. And what did I say here on this channel? I said that I don't even trust what these BRICS nations are saying they're going to do. Do you trust in Russia? Do you trust in China to bring out a honest currency that's really even partially backed by something? Do you trust these countries to do something that's actually good for the average working person? Right? Money that can be created in endless amounts, completely fiat, not backed by anything, that's the best for the governments in the top 10% because they can pick and choose who gets the bailouts, who survives, and who doesn't survive. Because when you have that type of currency creation and when you have that type of influence on what the currency is used for, and you can have endless amounts of it, of course, your opportunities are endless on what you can do, what you can manipulate, the bubbles you choose to keep propped up, what you choose to let collapse, folks. Liens, foreclosure threats add anxiety over insurance-driven condo fees. Here, we've talked a lot of times about HOA fees, how HOAs are going up and up and up. A lot of it's a lot of shady business with the HOA providers, with the HOA entities. But a lot of it is insurance and insurance companies. That's a whole nother road to go down. Insurance companies suffering big losses. What do? They spread the cost of these higher losses, especially all these extreme weather losses. They spread that amongst their customer base. And HOAs, homeowners association, they have to pay for insurance in the common areas, right? So if you own a townhome or a condo, you have this fee that covers maintenance, insurance on what happens in the common areas, right? So if a wind comes through and rips the roofs off of several condos, that's up to the HOA to pay for that because usually you just cover the inside of your unit or the inside of your home when you have an HOA. Not always, but in most cases. So what are they doing? HOAs are raising their fees. They've been raising their fees. But now with the rising insurance costs, HOA fees are rising dramatically. And it's adding to the stresses of being a homeowner. So if you have a home that's not in a homeowners association neighborhood, consider yourself lucky. And here's how bad it is. This is out of Hawaii, Honolulu. Soaring condominium fees due to insurance cost hikes are putting owners at risk of foreclosure and trapping others in property they cannot sell. Because again, who wants to buy a home with an HOA fee that's more than the mortgage in some cases? According to residents struggling to keep up, country and state lawmakers, insurance regulators, and the government all acknowledged it's a huge problem and are working on all sorts of remedies. But people faced with enormous bills tell the news outlets time is running out. And still on the topic of enormous, outrageous costs of owning a home, look at this. Housing market strain out of Fast Company. Housing market strain. Buyers need an 86% income boost to keep up with home prices. So why do you think we need 2,000 plus down payment assistance across the U.S. to try to keep the housing market from completely imploding, right? So far, they've kept enough sales going through that they've kept prices propped up, right? Enough financing, enough down payment assistance, enough corporations buying homes to keep prices propped up. But when you take all these factors away that are keeping prices still from falling, home prices will come down just like sales have come down. Sales are close to, I believe, a 40-year low. I think we talked about that in our last report. But think about that, an 86% boost to your income to keep up with home prices. Go ask your boss if you're working for the man still, if you're working in the system still. Go ask for an 86% raise. See how that goes for you. Since January 2020, incomes have risen much more slowly than the cost of owning a medium-priced home. Why? Because more debt, people are borrowing more, driving home prices up, more non-owner-occupied purchases, meaning Wall Street's buying more homes and investors are buying more homes, keeping prices propped up. All right, next, folks, take a look at this out of payments here. Capital One CEO says consumers are in good shape. Look at all the things we just talked about that proves that consumers are in very bad shape. But yet the Capital One CEO says consumers are in good shape as card purchases surge. Think about that. People are relying more and more on their credit cards. They have less cash to pay for things in cash. And it's not really cash. It's mostly swiping their debit cards. Remember, cash purchases is just cash that you have saved up. But that's mostly digital because people are swiping their debit cards mostly. Of course, you still have the cash people buying cars at rummage sales, yard sales, etc. But more people swiping credit cards and going further into credit card debt, is that a sign of a consumer that's in good shape? right? Now, of course, this is the Capital One CEO, so he's not going to say anything else. Of course, he's going to say the consumer's in good shape, right? He can't say the consumer's in bad shape because then that would not justify the continual increases in the credit card limits that people are still able to get. Remember, they're not dropping credit limits for the most part. It's only a small fraction of banks that are actually tightening right now. Most banks are actually still giving more credit limits. I get new balance transfer offers every day from several different credit cards. Maybe not every day, but when I check my mail, it's several a week, put it that way, where they want you to do a balance transfer, introductory offer, new credit lines available. My credit's actually pretty good, but even people with low credit scores are still getting extensions of credit. Even people coming out of bankruptcy are getting offered credit cards within days of filing the bankruptcy. I know I have friends and I talk to clients that have had this occur. Now, sometimes I advise my clients, I don't give advice here on this channel. Sometimes I advise my clients to actually file bankruptcy. When you're so far in debt and when you're robbing Peter to pay Paul, when you're doing these balance transfers, and when your debt keeps rising, and you've already cut out a lot of expenses, you stopped traveling, you stopped going out to the movies, you stopped paying for entertainment packages and cable, and you still are going further in debt each month, then it's time to file bankruptcy. Unless you've got a huge job promotion or a new job, and unless your income is going to get a drastic boost, I tell people sometimes to file bankruptcy. Of course, I have to be careful on this channel. I don't give any sort of recommendations here on this channel. Giving someone sort of direction on what to do personally or financially involves a much, much deeper digging into their financial situation than just what I can say on this channel and responding to comments and stuff like that. So don't expect any advice from not just myself, from any YouTuber that's actually got any common sense. Americans haven't been this worried about making their credit card payments since the pandemic. That just came out earlier this month. Just a reminder of what's really happening with U.S. consumers. It's not the rosy picture that's being presented by people like the Capital One CEO. Now, let's talk about what I see happening here, what I think is a risk. And as most of you know, I've been taking the Warren Buffett approach where I have still some stocks, I still have some investments, but it's very low compared to what I usually have invested in the markets. Why? Because I see a lot of risks. I see a lot of risk. And it's not just me. Look at the central bank cutting rates. Obviously, they see something as well. Look at all the billionaires that went to big cash positions. Look at all this major portfolio sell-offs that we saw out of Warren Buffett and Berkshire Hathaway. What do I see happening? I see possibly, and I say possibly because nothing's baked into the cake. Nothing's 100%. All right, if things were that simple or 100% to happen, the people that predicted the housing bubble going bust 4 or 5 years ago would have been right. Because you'd think with home prices where they're at, the bubble would have went bust, right? A lot of people say it's just common sense. Prices are too high, they have to come down, but they don't look at the underlying factors. So, and actually, when you dig into all the ways that they're keeping the housing market propped up, it's more commonsensical to think that the housing bubble wouldn't have went bust, and it did. And it did happen, as we said, I should say. We were one of the only channels here to say that the bubble would not go bust until all these programs get erased and something drastically changes. You will not see a crash or a panic or deflation, especially in the housing market. Now, what do I think could come in and change that? Well, we've talked here about surprise situations, market-changing things that occur that surprise people and even shock investors and cause big sell-offs. I think we're very, very likely to see an exposing of what a lot of bankers have been doing, a lot of very bad things. Now, I have to be very vague on what I say, but as you can probably imagine, the bankers don't have our best interest, and I'm talking about us, the working class people. They don't have our best interest at the forefront, to say the least. So when you dig into it, you see that these banks are involved in a lot of things and how the money is being used and how they're keeping prices elevated and how they're helping themselves and those around them and not really doing things for the greater good of the working class folks. So I think something like that is going to be major and a market shock that I could see happening anytime, maybe even before the end of October, but definitely before the end of the year. I expect some big things to be exposed. Let's put it that way. Biggest wine distributor in the U.S. cutting staff. Now, this surprised me. because people love their wine. The tight wine market has seen a reported shock reaction from U.S. distribution giant Southern Glazer. What does it say here? Reportedly laying off hundreds of employees across the country, some former employees said on social media. These reports are unconfirmed because it's just social media posts here. Just laid off 3,000 people across the country. Wine retailer Gregory Stokes said during a Zoom conference. So it's not just speculation. They're getting rid of an entire wine division because of slowdown in wine sales. So there you go. Another example, folks, of people cutting back. And I'm surprised at that because people love their wine. Even when people cut back, it's usually not wine. I know, well, have you ever seen a homeless person that wasn't intoxicated? Right? Even homeless people somehow scrape up enough cash or they collect enough cans and bottles to cash in to buy that cheap wine. But even with that type of demand and with people that have to have their wine, people that are basically hooked on it or alcoholics, they're still seeing a slowdown. Right? So what does that tell you? It tells you the consumer's slowing down, folks. Things are going to get very, very interesting here. They've been interesting. It's going to get even to the point of shock here, I think, before the end of the year. Possibly, I've said October's historically a major month for red months, where things go into the red, where things drop, where there's market crashes. Not saying it's going to happen. We can only look at probabilities. Again, nothing's 100%. Nothing's baked into the cake or carved in stone. Got to look at the probabilities, folks, and all this information. So please let me know what you think about this down in comments. And we'll talk to you in our next report. Please make sure, again, you are subscribed. Come back. Very important time to stay ahead of the financial curve. Talk to you very soon, everybody. Peace.